What's going on, guys? So in this video, I wanted to just give, a quick overview of some of the most successful trades and investments that I made over the past year, wrapping up 2018 in just a couple of weeks. And I kind of wanted to, take a look back over my investment journey and kind of, what were the trades that worked for me, and then if I might be making a video that were my worst investments and trades of 2018. And I kind of do this every year to kind of, reflect upon, okay, why did these trades work or why didn't they work, over whatever time frame I gave each one. And, what were my thoughts of why I started or why I exited the position. And it kind of is a way that I like to, kind of validate, like, okay, was I making an investment decision based off of logic and reasoning, or was I doing it simply because of, a mishap that was going on in the market and I got scared out of my position when I should have just held on. So, in this rundown, I kind of just looked at the companies that, yielded me the best returns over the trades or investment that I made with them. Almost all of these are closed out. Two of them are still open, but they're little explanations that I'll be going into in a bit. And I kind of wanted to just, walk you guys through that to, be a little bit more transparent with my investment, philosophy and the companies that I personally look at. So if you guys are interested in this, make sure to stick around. I will be making a part 2 of this video, and I will be going over my worst trades of 2018. If that is something you guys are interested in, make sure to let me know in the comment section down below. But without further ado, let's just kind of go down the list. So first being, one that I'm sure all of you know that I have had a long experience with, for good and for bad, is AMD. So AMD, I've made multiple videos on AMD talking about how my price target, months ago, about a year ago at this point, was about 1051, and I was just kind of holding on for dear life. I thought the company was undervalued, and as any AMD shareholder knows, the company can be extremely volatile, month to month. So it was definitely the roughest ride out of all of my investments. Actually, there was one other one that was just about as rough, maybe a little bit more rough, but I didn't hold on to that company for nearly as long in comparison. So, it is what it is. So you can see I made a video I posted on Instagram. So again, if you guys like to, keep up to date on my trades and exactly what I'm looking at, I do that on my Instagram more often than my YouTube channel, just because it's naturally easier. So if you guys are interested in that, Millennial Investing 101, it's down in the description. Follow me if you want. If not, more power to you. Anyways, so I made a video talking about how I exited my AMD position and I got out at $25 a share, and kind of going through exactly what was going on with the company. So I initially started my investment in AMD mainly because of the Ryzen lineup that was coming out. So the Ryzen lineup came out and it blew everybody's expectations out of the water. AMD, I've said it time and time again, has always played second fiddle to Intel and to NVIDIA, and has never, over the past, say, 10 years or so almost, has never really had its stronghold, semiconductors that it's been able to be like, yeah, don't say that you're only going for AMD for a budget, you're going for AMD for performance as well. And so this line was kind of the first big spark that made me want to invest in the company. Next, I also did kind of look at AMD as a direct comparison to its competitor Intel. And so I did a video about how I explained how I thought that AMD was getting overvalued once it, surpassed this model. And now this model obviously has some flaws with it, and, I'm still kind of tinkering around how I can do competitive models that, say, aren't used by everybody in the industry. Because if you do a one-to-one comparison of companies that are relatively well-known, I personally think the majority of any gain that you can possibly, any edge that you can possibly think about has already been priced in, the more popular the model is. So I tried to, use the popular models, but, go off of my own weird, abstract way of looking at it, as you can say, and kind of, give myself a different perspective that, combined with my, overall perception of the company may or may not give me an edge as far as, my pricing situation. So I looked at it and, based off of, my experience with AMD and, my experience with Intel, I assumed that AMD was worth roughly 10% of Intel, and I thought that they could, accumulate a market share that is equivalent to 1/10 that of Intel. And so based off that metric, the company was significantly undervalued. At this point in time, it was only, roughly, $9 to $11 billion in market cap. And I assumed it could be, a $25 billion company, no problem. Another thing to keep in mind is that during this time was, kind of the real transition to Lisa Su as the new CEO. And Lisa Su came in, a couple years ago and completely changed around the company. If you guys were following AMD during their FX line, Their previous management was not really in, the best of light, especially for shareholders. And they were just kind of pumping out products that, were just kind of like, ooh, they go at 4 gigahertz. But then, doing any real world application with them kind of meant nothing. So I really liked the transition that Lisa was doing with the company, and also just all of the segments, data centers, cryptocurrencies, gaming, everything was just exploding. And I thought that this was a great industry, to be a part of. Now, again, the main reasons why I got out were obviously it hit my price target. I made a video about, how it hit my price target, why I thought it was overvalued above it. And then also I talked about the drastic shift in market, pessimism to optimism. And you could see it visibly in the share price. It was days with, not a lot of volume. It wasn't really institutional money. A lot of it was retail money. And they were just pumping up the stock over and over again. And now, personally, I just don't like doing that. I have a bit of a psych background. And whenever I, go to make or break my position, I do heavily look at, the investor sentiment in the market. I try to analyze it as best I can from a psychoanalytical perspective. In addition to my fundamentals, I don't invest purely or trade purely off of that either. But it is something I definitely keep in mind. And so far, in this type of, optimistic, and irrational and exuberant market we've been in over the past couple of years, it has saved my butt on a couple of occasions. And I just thought that it was time to leave the company. So I left with about 137% up. And, I couldn't ask for more than that. I held the stock for, I think, ballpark 8 or 9 months. So it wasn't a full year, so I did get capital gains, or I will be getting capital gains tax on that gain. But at the end of the day, I'd rather, walk away being up based off of my, value of the company than, hold on to it for over a year just to, get on that tax break and then actually lose a lot of the gains. Or be holding something that I think I shouldn't be holding because it's grotesquely overvalued. So that's about it. Next was Starbucks. So Starbucks, I got in actually almost near the bottom, and I'm not even trying to, be woohoo about that. Like I made some recordings on Instagram about that if you guys follow my stories, and I did talk about it on the channel even prior to the quick move up in price, just to kind of give some validity to that because it wasn't documented fully. I mainly bought Starbucks because I loved the company, and I think the company, I am a newly, devout coffee drinker over the past 2 years, and it was Starbucks that really got me hooked on coffee. And, I live in Massachusetts, and normally Dunkin' Donuts is like the coffee shop around here, but I've seen more and more Starbucks pop up, and especially with the younger generation, everybody seems to be preferring Starbucks. So I loved the company, I loved what was going on with the consumer sentiment around them. And then randomly one day, I got a notification on Robinhood that Starbucks was down, I think it was like 20% or so. And I looked into exactly why it was going on. And the biggest headline, at least what seemed to be the thing that was buzzing everybody around, was that people were afraid of China growth slowing. And Starbucks was closing 150 stores or so, and they were opening up, I think, 50. And that was abnormal to what they were doing. And everybody thought that, okay, growth is done for Starbucks, things like that. And I just assumed that that was complete nonsense. So I couldn't really justify exactly what the major sell-off was. If it only, say, went down like 4 or 5%, I could justify it. But dropping 20% or so, in the matter of a couple of days for a company like Starbucks made little to no sense for me. It had a great dividend. It had a growing dividend. And I thought it was just, undervalued at that point. So I do currently still own my Starbucks position, and that's the reason why I had this exit price in green, is because I do plan on holding this company, and I've made a couple of videos on, I plan on holding this company for the long term, and if there is a recession, I do plan on loading up on this company, because Starbucks, being a consumer discretionary, will get hammered during a recession, depending on what type of contraction we have in the overall market. If consumers start to, feel a lot of pressure, Starbucks is going to lose a lot of revenue. And so I definitely think that this company will, go really far down in a recession, but I think it will come back, and I think it will continue to be an amazing company, for the next few decades. The reason why I put that as my exit price is because I do have a stop loss order at that particular point, and because that is when, well after I was already in my position, I think 3 or 4 months later, they had, their last earnings report, blew everybody's expectations out of the water, and the stock price was moving, 10% every other day. And I kind of look at that particular price point as that was when institutional money came in and propped up the price. And if that level were to, say, break on a technical perspective and also on a psychoanalysis perspective, I think that is when a lot of investor sentiment will be lost. And while I do plan on holding this company for the long term, if I'm up 32%, say, in just a couple of months, I'm just going to take my profits. I'm willing to buy this company if it, say, drops, but I think if Starbucks drops, it's going to drop hard. And so I just think I can get in at a better price. And so that is a bit of a speculative play, but Starbucks is a company that even if I didn't want to, say, hold on to this money, I would still hold on to it, without a problem right now. It's experiencing some, volatility recently, but again, it's had a massive run-up in the past couple of months. So I don't think investors can really complain. I'm just, covering my butt in case the worst case scenario. Next, we have Baozun. So Baozun is a company that I have only briefly mentioned on this channel, and is largely due to the fact that, one, not a lot of people pay attention to what Baozun is. Not a lot of people even know what it is. And also, of all of my, big successes, this is one of the companies that I had a lot of, I spent a lot of time researching what this company did, but at least here in America, there isn't that much information you can actually find from it outside of the company's filings. And because they're not filing here in America, this is a Chinese-based company, their accounting measures aren't necessarily that reliable, let's say. So this is a company that, for those of you that don't know, is essentially a mini monopoly on the Chinese e-commerce platform. It is a company that, the large reason why I started a position in the company is because it transitioned from, it used to be a standalone e-commerce retailer, and then it started to switch to a cloud infrastructure-based referring service, you can almost think of it. A lot of people relate it to Canada's Shopify. I don't really give that a one-to-one because Shopify deals with mom-and-pop shops normally, and Baozun is essentially the Shopify for any American-based blue-chip company that wants to, say, set up shop through Alibaba or JD or just have any stronghold in China. You have to go through Baozun, essentially. And in order for them to really open up an e-commerce presence, Baozun did that. They got a percentage of the sales, and they got a recurring revenue fee for just maintaining their service. So Baozun, and they also had an amazing balance sheet. So Baozun, to me was just amazing. It was a small cap. I think when I started investing in it, it was only about $1 billion. And I just thought it was this discovery that no one really grabbed onto when everybody started focusing on Alibaba and JD, about a year ago, when the Chinese tech giants just kind of took off. The main reason why I exited was because it was really difficult for me because there's no direct competitor for Baozun, at least when I was doing this, that I didn't really know exactly how to price it accordingly. Its balance sheet looked great, but and it's partially owned by Alibaba and JD. So between that, I assumed okay, these major companies that are the biggest growing companies in China have a foothold in it. This company seems to be going in the right direction, and these massive companies probably won't attempt to replace them anytime soon with their invested sentiment in the company. So I did a relatively loose model based off its revenue, based off of JD was doing, and based off of Alibaba was doing, and I just kind of gave it a ballpark estimate for how much value I would give Baozun to how much value I was assuming they were contributing to those two mega cap companies. So it was very loose. I didn't feel super confident on the exact numbers that I was getting, exactly what was the fair value, but I loved the company and I thought they had a strong balance sheet and they had really good growth. So that's why I entered the position. The business model was great, but again, I don't directly work with Chinese e-commerce companies, obviously, because I'm here in America. So it was still, even though I felt strong about why I was investing in the company, it still seemed more of a speculative position to me. So I was mainly giving myself a very conservative price to its intrinsic value, or whatever you could calculate its intrinsic value off of, simply because I wasn't that familiar with the company. And then what really, pulled my trigger on selling it was that growth started to slow, and then there were two earnings calls back to back that the management seemed to be really, dodgy of questions on investors, and I don't know if the management just didn't fully understand exactly what was going on with the company. What the investor was asking of what was going on with the company, but they would give really dodgy questions and not really answer things straight out and just say, oh yeah, we're putting money back into the company and things like that. But it didn't really answer questions well, and that just kind of rubbed me the wrong way when I was already on the fence of, should I continue to hold on to this even though I've gone up? So I sold out. I made a 56% gain, and thankfully that was a couple of months prior to the whole trade war issue, or before the trade war issue resurfaced, and now the company has gotten hit really hard and it's gone down to $36. Although the company was also at, I think, about $60, $65 a share just a couple of months ago. So obviously I could have made more money, but, I felt good with my return. It, was a great return in such a short amount of time, but that's just why I pulled out. Now, Micron, so Micron, the biggest company, or at least the biggest trending topic here on my channel, and it's why the majority of you even started subscribing to my channel, has been, a very volatile ride over the past couple of months. Baozun was definitely the most volatile of all these companies. Baozun, I remember holding on to it when I started a position. They had an earnings report next week, and it dropped 18% on the day. And I was so confused because they beat estimates, they raised guidance, and I had no idea what was going on. Thankfully, I added to my position, and that's why I got such a low entry price, quote unquote. And I was able to, realize, an extra 20% gain or so just off of that day. But MU has been, the bane, and, and it's been my reason for, really digging deep into different semiconductor companies, and it has, given me a lot of money, but it's also, been such a hassle to deal with all the different opposing arguments that are for and against Micron, and it's just a lot of work to keep up with this company. So, I entered into Micron in 2017, I believe. It was either early 2017 or late 2017, I believe. Right around $28.06 a share, or 60 cents a share. And now I have an exit price here of about $61. And that is not entirely true, and it's not false either. So I made a couple of videos about Micron and how I started to sell off my position as it ramped up extremely quickly in just a couple of months, from the $40 area to $60+. And I was confused with why it was gaining so much traction, and I thought that the majority of the potential upside that I saw in the company was already priced in. I, continuously attempted to discount it more and more based off of what I think it should be due to the investor sentiment of the cyclicality of the space. So I started to sell it. I still do own shares of the company, but I did that initial sell-off, and then I did do a swing trade of shares when, right after the first, reach up to about $60 a shares, it immediately plummeted down, and then it traded, in a trading range for a while. And I talked about how I think that it was kind of, all of the things that were getting priced in the company were just kind of hearsay. So I started a position, or started, accumulating more shares in a position, because I thought that, if the company comes out and it says that, okay, yes, what you're hearing about is as bad as it is, I'll sell my position then. But the company wasn't really saying what all of investors were saying. So I just assumed it was market noise. And then randomly, in a week span of time, it went up another 30 or so percent. And then I sold out that swing trade, and it went around the $58, $60 range again. And I still have some of my position because I still believe in this company long term. But that was kind of, just what's been going on. And so off of my initial, trade, I guess, quote unquote, in about a year, that was about 113%. So definitely something that, no one can sneeze at. And, you guys, if you followed any of my videos, you know exactly why I'm invested in this company and why I sold out of it, because I've documented this company more than any other one on my channel. So I won't go too far into that. But just one I wanted to, highlight there. And then iRobot. iRobot was a company when I first attempted to make this channel and then kind of gave up on it because of school and I just too many jobs and things like that. iRobot was a company that I bought in pretty much due to, one, I heard about the company because my friend got an internship there and really, enjoyed his experience, looked into it, and then got a notification that there was a severe sell-off. It dropped again 20% or so in a day off of an earnings report. And I looked into it because I didn't know the company that well at that point in time. It seemed that the reason why they sold off was not because they didn't beat estimates and not because they didn't raise guidance. It was because they didn't beat them well enough. And then I looked back, and it seemed that consistently over the past 7 or so quarters, they were just destroying analyst estimates. And I just kind of looked at it, and I was like, are you serious right now, Mr. Market? So looked at the balance sheet, looked at their annual report, looked at their last earnings report. It seemed great. Everything seemed to be going. They were having good growth. They had a great balance sheet. So I started a position. And then eventually, about 8 or so months later, and that seems to be the trend of the majority of my successful investments. They're only about 8 months, which is a weird thing to think about. But anyways, I started to look at it, and as I was reading, the management wasn't really going in the direction I wanted to. They were spending a lot of money on the Brava line, which I thought, the Roomba in itself is, like a luxury product that I think is only being sold well because, we're at the peak of our economic cycle. But the Brava is like even more of like an outlier. Like, you don't need this really. Like only a select few people need this, and I don't think it's going to be driving sales, for a long period of time. They just recently released a new product that was about $1,000 initially. So like they're getting really premium for things that, in my opinion, aren't needed. And also competitors started popping up left and right. And, their wall of patents that I went over in a video a long time ago from last January is pretty much keeping them afloat, and it's allowing them to either knock off, competitors for coming up, or them getting royalties off of their innovation, because it's essentially all patented by iRobot. But I just don't think that that's going to continue for much longer. So I did sell out of the position. Who knows? I'll see what the company decides to do, or if the company gets to an extremely low value again. They do still have a really good balance sheet. So I might potentially go, back into iRobot later. But for right now, they just aren't attractive to me. So essentially, off of my 5 biggest trades / investments, or whatever you want to call them, from last year, up together, they were up about 81 or 82%, essentially. Now, again, obviously, my account was not up 82%. I will be completely honest about that. So I do have some, pretty big misses. There are a couple of, I've attempted to, go through swing trading. I've attempted day trading every now and again, dabbling my feet here and there. And essentially, I have, over the past couple of years, I've decided that I am really good at investing in, or at least in late stages of the bull market, also, mind you. I'm good at investing in growing companies in the tech field, but I am currently trying to diversify away from that area. But it did yield me amazing returns, and so I cannot say that it was not worthwhile, but I'm looking for a more stable investment approach. So again, I will be going over, if you guys want, my worst trades of 2018, and I will kind of go into what made me, want to put money into them, and then exactly why it bit me in the butt. But wanted to just kind of go over that so you guys can get a view of exactly what type of investments I look for, and just kind of what areas I'm invested in. So this video is getting pretty long, so I'll leave you guys with that. Thank you guys for watching. Hope you guys got some enjoyment out of this, and I'll catch you guys in the next video. Peace.